is Wednesday, November 19th. I'm recording in the morning again. 2 days off. Monday, dropped the girlfriend off. She's going to Japan for close to a month. And then yesterday, I just decided when a friend, and this is the benefit. You know, this is the goal for you should be to retire early. And part of the reason you retire early is so that when a friend calls you on Monday night and says, hey, want to go hiking tomorrow? I took the day off. And then you hear about the gymnastics, the form gymnastics that this person had to do in order to take a day off because of quote unquote burnout. And it's not like he didn't have the vacation time. He had it. So made me feel very thankful. Again, we're heading into Thanksgiving, so I'm very thankful for that. I got a big show. Okay, we're going to go over. Things aren't as bad as you may feel they are. So we're going to look at things. I'm going to calm you down. It's all about Nvidia. Today is Nvidia's earnings. And while the market goes down, there's still a lot of stocks that are going up. And I'm going to point out a couple for you, 3 in fact. And I'm going to point out exactly where I found them, how I got them, blah, blah, blah. We will look at Catalyst Watch. I gave you Catalyst Watch. There was a stock that was up 7% yesterday from the Catalyst Watch. Again, if you had Seeking Alpha Premium and you do that, it's my favorite email or article every week. Rallied 7%. We're going to go over Alpha Picks because there's quite a bit of good news in Alpha Picks. And I will show you if you just had Seeking Alpha Premium and not Alpha Picks, you don't have the bundle. I'll show you. Steve Kress always drops these damn Easter eggs all over the place. I will give you a strategy in TrendSpider, a 1-hour strategy that you can use to trade some of these, these alpha picks. We will go over charts because charts matter. And I'm going to point out to you a couple of charts where you could tell we were going into a turn down. And you didn't know when, you didn't know how. But again, if you're losing a lot of money, we'll look at it. And again, Micron, we'll go over that one. We'll go over that one because there's news out today that Micron could be pumping again. Microsoft and Amazon, why were they down? We'll go over that. Did you buy at the high? Because I've got a little short video from Tyler on Instagram as to why. Hamid made a big move yesterday in his portfolio. I will point out why Oracle is probably a great buy at this time. We will show you a Weinstein indicator that shows some stocks that are turning around, and then we'll go over the earnings. Okay, so again, it's a big show. But I want to start out with QQQ. And you see the chart up here on my screen. Okay, this is the 4-hour algorithm. It is QQQ. I have pulled back the volume back here to April so we can see where people are buying. And you can see down at that 596, people, that's a volume shelf. Okay, right there. Where is QQQ right now? 598. It stopped on that volume shelf in the afternoon. That's a pretty big sign, because if we go down, you could go down to this 585, which was the August high. Okay, you just want to paint some lines in there and understand. If we went down to this 585, that's 6% down. All is not like you are literally 5% right now off all-time highs. If you would go back to the recent highs, it might be an 8% pullback. I think it's likely. Why? Because we touched down here, and that's right at the 200-day right there on the 4-hour. I think it's likely. But let me just go over the math for you, okay? Because if you bought at the all-time high, we can go and look at the all-time high here on Seeking Alpha. We can just pull up QQQ, and there's this 52-week slider. So the all-time high, 637, and it gave you 1 penny, okay? Let's call it 637. You're at 596 today. That's 6% down. You have lost $40 if you bought for each share. It's 6% down. That's not bad. That's not a depression. That is not a major pullback. That is something that is healthy for the market. And this is why you want to look at these things, because if we look at the weekly, again, we haven't even pulled back on the weekly. So I think it's likely that we continue down. But there's a lot of catalysts to go up in this market. So for me, am I making purchases right now? No, I'm waiting for today's earnings, because if we hear from Nvidia any even hint that there's a slowdown, we're going to hear about it in the markets. Nvidia's move to smartphone style memory could double server memory prices next year. So they're increasing their spend, and they're saying, and by the way, Micron is mentioned in here. I think we'll go over this one yet later. But it's all about Nvidia. If we pull up Nvidia and we look at this, it is all, here's what to expect when Nvidia reports today. This is the article that I wanted to put up there. Let's put this one up there. Why did that one pull up? It's all bubble talk, all the rage, blah, 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 the whole thing. And then you want to see down here. Well, I think this one's later. But what do investors want to hear? A beat and raise. But the bigger focus will be whether AI spending is slowing. That's it. That's what you want to hear. And then while the markets go down, we can go and look. Okay, Rico, a listener on Spotify, brought up to me yesterday. He said, hey, you may want to look at Merck. So what did I do? I immediately went and looked at the chart and I said, that's an interesting chart. Again, he says, you may want to look at Merck. I do. Let's see. Because the MacD's going up, the RSI coming off of oversold, okay? Your 200-day has just turned positive. The 4-hour algorithm had you in here at 85.72. So again, if this was on your radar, maybe you purchased at 85.72 knowing that, hey, the last time it pulled back back down to this 200-day. I'm going to put that in as my my downside. But the upside, again, 85.72, if you had this in there, you're up 13%. And then after looking at the chart, I said, I could make 13%. Let me look at the weekly, because are we stretched here? And the answer is no. And I would say if you bought at 96 right now, your upside would be 101. Why? Because the 200-day will typically be a resistance point on a weekly for a recovery. But you can clearly see, and if you can find these and you can do a scan in TrendSpider, you can do a scan for any stock that is trading under its 200-day, but is up 10% or more in the last month. And that's going to show you a little button hook on the bottom. And you see the MacD coming back up here, and you see the RSI. Buyers are showing up. And I want to show you why buyers are showing up. Because it's a cheap stock. It's a strong buy in the quant. Look at the valuation. It's trading at 10, whereas every other biopharmaceutical trading at 18. So yes, Rico, great buy. Again, understand what you're looking at, understand what you're owning. And in a down market, you can find stuff like this. And I was looking yesterday. I said, you know what? Let me go and look at a couple of stocks that are on my watch list. And RIG is on my energy watch list. And RIG is a strong buy right here. Okay? Let's go and look at the chart. Because RIG, when you look at a weekly chart on this one, same kind of thing. It's under its 200-day. MacD down below the oscillator, coming back up. It's running right there. And if we look at the 4-hour, where did it get you in? $3.21 back here on October 17th. So during this time where you're feeling uncomfortable because the market's down, there are stocks that are going up. And I want to show you another one, because I'm just going to go to the newsletter. And this is one that I brought up before, and I want to show you that I brought it up before, okay? Heritage Insurance. You can see August 5th, May 13th, May 16th. Why did I bring this one up? Because I think it was Warren Buffett. Oh, let me just look at the it's HRTG. I think I typed it in wrong. HRTG. Warren Buffett bought Chubb, I think. It's Chubb Insurance, I believe. And I went into Seeking Alpha and I said, you know what? Let me look at insurance companies that are comparable to Chubb that may have a better quant rating, may have better fundamentals, because Chubb at that point was just way too expensive. It's a strong buy. This has been a strong buy ever since $14. You're trading at $29 right now. Again, if you go and you look at this one, HRTG right there, 4-hour algorithm, if it was on your thing, right there at 24, you can see using the 200-day as support right before earnings. Now, would I buy right here? No. But that is a fantastic gain. At MacD, below the oscillator on November 4th, right when it gave it to you, RSI at 49. Pretty good trade. And again, you look at the weekly and it reset itself. Okay, it came lower. Would I buy and hold this one right now? Probably not. But again, you need to do your own research. You need to know what you hold. And this particular one, it's number 4 out of 53. You can see Allstate, which I brought up before and is an alpha pick. This is the number 1. 1 month, you're up 8.27%. So what's the point of all this? There are always stocks that you can find if you have the right tools. I found Merck from Rico, and I was able to do my research, throw it on a watch list. It's still below its 200-day. I like it. I found RIG through Seeking Alpha because it was on my watch list and I was able to evaluate it easily. I found HRTG. I found Heritage, and because it's on a watch list, but I personally didn't take the trade. But some people in my audience probably have. I'll point it out again. Micron, we just looked at that one. Micron, Nvidia's move to smartphone style. This particular article, Micron is a strong buy in the quant. Look at 6 months ago. The valuation score is now a B. It was C plus 6 months ago. Everything else is an A plus. And they're bringing their revisions up. This one, over 5 days, is down 7%. Are you going to buy the dip? How are you finding an entry? Again, I pointed out to you. How are you finding the entry? And that's the biggest reason why I have these tools. And TrendSpider, if you don't know anything about technical trading, 52 trainings per year. I was just going over it. I sat with the senior vice president of trading at Fidelity every week for like a month or two. And I had enough knowledge to go out there and learn on my own. These guys are offering you a product expert who is going to sit with you on Zoom and go over every week for the next year what your plan could be. They can't give you financial advice. They won't tell you you should go look at this stock. They won't. But you can tell them, hey, I want to learn about this strategy. Can you help me understand this strategy? Hey, I found this stock. What's a good strategy that I might be able to look at? What is a MacD? What is an RSI? What are some of the indicators that you guys have? What have you released this week? 52 trainings per year. Again, it's $68. Here's what you're going to do. 68 times 12. Okay, that gives you your year-long price divided by 52. And that's your cost per training. Go and find a cheaper training. And then the other tool that I have, and we're going to go over this, is Premium and Alpha Picks, the bundle. Again, I'm just pointing it out to you. Those are the tools that I use. If you have tools that are great and they work for you, I am happy for you. Don't use mine. But one of them that I gave you earlier this week on Monday, because Friday it comes out, it's the Catalyst Watch email. And I even pointed this out on Monday's show. I said, hey, Bill Ackman's giving a presentation on Fannie and Freddie. This is on my watch list. I didn't take the trade because I have lost money and I've gained money in this one and I've moved on. It is on a watch list. I have it on my watch list. I like it. They were up 7 and 8% yesterday. They rallied. Again, you could have gotten this one if you had the Catalyst watch list. 7 or 8%. Both of them, by the way, and Fannie Mae is my preferred. This is a strong buy in the quant. Again, it's a strong buy in the quant. You can see the 52-week range is between $2 and $16. You're trading in between that at $10 right now. Go and find a technical way to find an entry on it. Maybe it's my 4-hour algorithm. Maybe you use that in TrendSpider. But go and find something and then back test. And that's what TrendSpider allows you to do. If you have a stock, you can go and back test it. So now I want to bring up Alpha Picks. Okay, this is part of the package. And if you don't want the whole package and you just want Alpha Picks, you can get Seeking Alpha Premium by itself, which by the way comes with a 7-day free trial. You can also get Alpha Picks by itself. But Alpha Picks continues to outperform. And I brought this one up quite a bit. ARQT, this one finished up 4% yesterday. In pre-market, it's up another 0.5%. Again, I have where I've added more on this. Do you have a process to do this? Because Alpha Picks, my different weighted portfolio, I was down yesterday, but not as much as the market in my portfolio. But I own this one at a larger percentage. And I know I brought up Brinker. I brought this one up as a rebound at 106. That was up 1% yesterday. And that one is up 0.5% here in pre-market. And I know I brought this one up. Kinross Gold Corporation. Myself and Steve Kress talked about this on my talk with him. This was up another 2%. And it's touching the resistance at 26. Again, I have this line from the previous all-time high. I trimmed back here and I went over this. I know I went over this. But did you buy the dip? Because I did at 23 and I got a nice little gain and I will start to trim it. Even the pick that was made on Monday, which gave you 3 to 5% if you were trading it within 20 minutes. Okay? I did not. It was up 3% yesterday. So you could have bought the dip on that one because it dipped back down. It wound up negative. And if you have Seeking Alpha Premium, let me just show you something that Steve Kress does all the time. And this is what's crazy. Again, get premium and you can pretty much find the Alpha Picks portfolio. You know, you're not going to manage it by yourself. But again, you can pretty much find these things. But he always puts Easter eggs in his articles. And these are the 3 best healthcare stocks, quant strong buys from Goldman Sachs Alpha List. Again, this isn't from Seeking Alpha. This is from Goldman Sachs. And his first pick right here, he brings it up. A biotech bull as highlighted in its recent addition to Alpha Picks portfolio. He dropped it right there for you. He literally just dropped it right there for you. And it's a great stock. This is one that I own more than the actual allocation in Alpha Picks. And by the way, A-, A+, A-, A+, far better than it was 6 months ago. It's up 62% in 6 months, and you've got better scores. It's number 2 out of 47 in biotechnology. Remember, you can trade many of these Alpha Picks, okay, using a 5-minute or even a 1-hour strategy. I built a 1-hour strategy, and I'm going to give it to you. And so you can go and run this one. KGC just got you in, got you right out at the end of the day with a 1% loss. But this makes you, over the last 60 days, 11%. Would you be happy over the last 2 months trading and making 11%? It wins 58% of the time. 12 positions over 2 months. And I'm going to give it to you. It will be there for you to import into your system. You can use it on any stock or any ETF, whatever you want. Maybe it's even Insight. But again, you can use that one. Personally, I like the 4-hour algorithm, and that's my preferred. And you can see KGC has you in there. But charts matter. Let's go over this because charts do matter. And why I use charts. I'm going to go over AMD. Once again, I'm going to show you the weekly on AMD because this is just a pattern of understanding where we are in the market and where we could go. So you can see I've got these highlighted right here on the MacD. And I've got a horizontal line on the RSI at 80. Okay, you can see the MacD high starting to cross over. The RSI at 80. What did we have? A 66% pullback. Then you go to the second one, RSI at over 80, MacD pulling back. We had a 40% turn down. Okay. Now we have the MacD starting to turn over. We have the RSI again at 80. And it's just a master. Traded at 267 right before earnings. Today, you're at $230. Let's see where it is in pre-market. Yeah, $230. That's an 11% drop. Was there an 11% gain in the stock already with going into earnings? Or did you just save yourself 11%? Because the indicators say, hey, I know the earnings are good, but we already had the OpenAI partnership announced right before earnings. We know that these guys are coming in with high expectations. Was the risk worth the reward? And I would argue it was clear, and I pointed this out before earnings. And I know I got one subscriber telling me he saved hundreds of thousands of dollars just based on me posting this. The weekly chart still hasn't even reset. Even with an 11% downturn, this MacD hasn't come down. The RSI hasn't come down. This could be telling us that we could see in this particular stock an extended period where the weekly charts need to reset. I still contend that AMD will outperform Nvidia over the next year. Okay? It's seen as king of the hill according to Citi. I still contend that Nvidia at $4 trillion can't go to $8 trillion. But AMD at $374 billion could go to a $600 billion market cap. They could. I like this one. And again, I brought up Micron yesterday, and I just brought it up again. But when are you selling? That's the question. It's not necessarily about when you buy. It's about when you sell. And Micron, when are you selling? Because we're in a really good run right here. Take a look at the weekly. We have never been up here as far as the MacD. The RSI is coming off an 83 level. So again, if you're sitting in these stocks and you say, well, I think I'm going to buy the dip. Maybe the dip's not done. The markets are incredibly worried about spending. Microsoft and Amazon received downgrades over AI spendings. We know what's going on with Meta. Amazon went and did a bond auction to raise money. Their stock got killed yesterday. It's clear the market is punishing everything, even Meta. And I will bring up Meta later because Hamid made a big move on Meta. And Microsoft had their Ignite conference yesterday, and the stock was down because customers are saying, and we're hearing this all over, why do we need Copilot when we can just go use ChatGPT or one of the other LLMs directly? And Microsoft weekly chart, let me just give you a look at this one. Because again, it is extended. You can see the last time we saw this, you saw multiple weeks down. So it's not just about the valuation. It's about that we ran up so far, so fast. There are clearly reasons to be bullish in this market, but you need to understand what you own and you need to know when you're going to sell. It is more important now, not necessarily to know, hey, when am I going to buy the dip? It's when am I going to get out? And that's where charts come into play. And that's why I urge people, get a charting program, whether it's TrendSpider, whether it's Thinkorswim, whether it's Webull, whatever you can afford, whatever you can use, get a charting program. Because monetizing AI has had some issues. The cost as TrendSpider has been super transparent to me about this. This Sidekick stuff costs a fortune for them to run. Every query that you do, it costs them a fortune. That's why the charge is there. And if you go look at the pricing of Sidekick, people have complained to me, it's so expensive. It's because it's costing them money. And so when you have Microsoft and you have Amazon going out there and raising money for this, and you have Meta saying we're going to spend more, where are they going to monetize it? And that's the question. And so again, The market is saying, when are we going to start seeing these returns? And when you have the weekly charts up that high, there's a risk. Now, I'm not going to give you financial advice. That's not what this show is about. This show is about my portfolio and what I see. What I do is my business. What you do is your business. Just make sure you have the tools to make decisions. And Tyler here, he's a great one. Why I buy stocks when the market is at all-time highs. He goes over it for you. He tells you, hey, number one, from 1975 to 2005, if you bought the S&P at all-time highs, your average one-year return was 13.6. But if you bought any other time, your average return was only 12.9%. So again, he's pointing out buying at all-time highs is not a bad strategy. It's actually not that bad. But you've got to understand, that's not every stock, that's the indexes. So understand what you own. And that's where I'm going to point you towards Hamid here on Savvy Trader. He's the owner and CEO of Savvy Trader, and he's got one of the best portfolios. Year to date, he's up 72%. 1 year, he's up 91%. Okay, he's up a total of 458%. And he made a big move yesterday. And he does these types of things. He sold 100% of his Google position. And he gave you a note. I love Google. And in less than a year, the price has nearly doubled from his purchase price. And yes, I'm selling all of it. Why? Because he's throwing it into Meta. He thinks Meta has a better chance of doubling than does Google. Go and do your research, understand what you... Hamid doesn't even use charts. He just does this based on fundamentals. Okay? And I like Hamid. I like that. Would I do this? Probably not. It's not within my realm to actually get out of Google. I love Google. But again, you look at the chart of Google and you're like, well, we've got to have a pullback. We've got to have a pullback. On the 4 hour, doesn't look so horrible. We may have more room to run. You look at the weekly, and you're scared to death looking down if you're afraid of heights. That's it. So now we had earnings. We had earnings come in. Oh, I want to bring up one other thing. Well, two other things. First off, Oracle. Are you buying the dip? Because we saw Oracle's $300 billion OpenAI deal, okay? It's already underwater. So if you think the OpenAI deal is going to bring in $300 billion, you're basically getting that for free because the stock has pulled back that much. That's the point of this. It has pulled back, and we have a buy in the 4-hour algorithm right there, which does beat buy and hold. 145% versus 96%. Again, if you want this one, at $200, I think there's a support level. So maybe you just buy at $220 here and then put $200 as your stop loss in, or say that that's your downside. But again, since the deal was announced in September, Oracle has lost $315 billion in market cap. Oracle's cash flow is predicted to be negative for 5 years straight. Is it a buy? Oracle is spending $35 billion just to keep the lights on. They're spending money faster than they are making it. That's the big deal. And that's why you see this stock that pumped up here on earnings and its high was $318. It's still expensive. But again, if they get that OpenAI deal, maybe it's not that expensive. Maybe they get some cheaper stuff. But you can see 118 to 345, and it's still a hold. By the way, Wall Street has a $342 price target on this one, a 55% upside. They are being beaten down because of the spend. So again, do you want a technical strategy? Do you want a fundamental strategy? Does any of this make sense? We saw from Home Depot yesterday. Home Depot stock didn't do much. I think it was down a little bit. But you're seeing a slide. Okay, this hit 420 and then just slid. And you can see yesterday, what was the Home Depot down? Let's see. Home Depot was down 6% yesterday, so it hit pretty hard. They blamed a lack of storms. But I think the consumer's weak. We should find out from Walmart tomorrow. I think we had Lowe's this morning. We had Target this morning. I don't know what those came in at. I didn't necessarily look at them. The market's up a little bit. Bitcoin's down again to 1.8, down another 1%. And IBIT's at 51. Yes, I bought in the 60s. I'm perfectly fine buying and holding. It's why you don't ask me about my advice, because I could get things wrong. And buying at 60s, was it wrong? We'll find out in 5 years. We'll find out in 5 years. You won't find out over the next couple of months. You'll find out in 5 years if buying at 60 was wrong. Could you optimize it and buy at 50 today? Sure. But Home Depot, look at that slide. And another one that came in with earnings. Let me bring this up too. One of the other things that TrendSpider has, again, the 4-hour algorithm is what I use, but they have so many other strategies. And one of them is this Weinstein, okay? This pullback is dragging a lot of charts to the edge. And so these Weinstein charts, they're colorized and they will tell you when to buy, when to sell, okay? The yellow means hold. And so if you're just looking at these and you're holding these, you're like, oh, I should probably find a way whether I'm going to add more or get out. And so Weinstein is a great tool to use, and you can import it into your system. Again, go and try TrendSpider. Try these Weinstein things for the stocks in your portfolio for $7 for the next 2 weeks. Just import this and try it out on your portfolio. And we got Powell earnings. Okay, this is another alpha pick stock that I have traded. Powell earnings came in. They blew it away. A beat on earnings per share, a beat on revenue. It's an alpha pick, but when you look at it, it's just a hold. The quant rating on Powell, it's a hold. It's a 2.98. That's not a super strong hold. Wall Street has a 5.0, but there's only 2 analysts that cover this. Their actual price target is 16% lower than it's trading today. So do you want to trade this one? Well, let's look at it. Again, they just had a double beat, a beat on earnings, on revenue, and a beat on earnings per share. And the stock is up 4%. That's just pre-market. It's up 4%. I don't have a buy in the 4-hour algorithm, but the MacD's down low. The RSI is at 35. It's oversold. Take a look at the weekly, and you'll see we may have more room to go down. So is the risk at buying at 321 worth it when your indicators are up so high, even with a double beat? It's a hold in the quant, and it's a hold in the quant because it's expensive. Again, 6 months ago, this was a C. It's now an F. It's now an F. It's expensive. So even this one, I'm going to hold. I'm not going to add to it. I'm not buying the dip on this one. Am I wrong? I don't know. But I own the portfolio value. So in alpha picks, they have a portfolio percentage. I own that. So if it goes up, great. If it starts to come down, I'm not hurt because the portfolio has this one as a huge gain. And then we've got Nvidia today. And by the way, Nvidia has pulled back 11% from its high, somewhere in that neighborhood. But it's back down at 183, which, by the way, was the August 8th resistance level. So it seems to be holding that one as support going into earnings. You look at the 4-hour, the MacD's below the oscillator. You're like, ooh, this one looks ripe. 37 on the RSI. Go and look at the weekly, and you can see the last time we saw MacD this high, we started to trend down. Now, it didn't crash. June 2024, you went from 144 down to 100. Is that crazy crash? For me, no. This stock was still in an upward trend. I was fine holding it. But again, is it expensive? Well, here's what to expect. And I'll take you to the bottom paragraph. What do investors need to hear? A beat and raise is expected, but the bigger focus will be on whether AI spending is slowing. Jensen Huang will need to provide clear details on Nvidia's order book, visibility surrounding long-term backlog. It was only 3 weeks ago, again at GTC, he revealed a $500 billion cumulative figure, which propelled Nvidia to the world's first $5 trillion valuation. The free cash flow story will be key, as well as strong margins. If they don't increase their margins or at least hold their margins, that indicates they don't have pricing power. Remember, AMD's on their heels. They're not catching up. They're still years behind. But that's, again, are people paying for those years behind? Because AMD may be a little bit cheaper to actually get. And volatility is identifying an anticipated 8% move in either direction. Where do you think the stock's moving? Is the 8% down to the 148? Maybe. Or new all-time highs, one or the other. I'm just sitting and waiting. The risk isn't worth the reward for me. Now, if it starts moving higher, maybe I get it back into this one. In the 4-hour algorithm, it's not a buy. But it makes less than buy and hold, 188 versus 283. So again, you have to know what you own. I'm not saying that the market's going to go down. I'm not saying that the market's going up. I'm not doing much, but I am trading those alpha picks. And those alpha picks are providing me outperformance. And why? Because they are fundamentally good stocks. And fundamentally good stocks have the tendency to go up over time. And I have a technical strategy to be able to do that. So if you have any questions, hit me up. Everything here is on Linktree. Remember, you get the Seeking Alpha Premium and Alpha Picks. You get the Black Friday sale, which saves you over $200. TrendSpider, saving you almost $1,200, I think, somewhere in that neighborhood. If you get that top plan, because it's instead of $321, it's only $68. By the way, that $321 usually comes with 3 trainings per year, too. They want you to learn this tool. If you want any of the other things by themselves, you can get them. Alpha Picks, Seeking Alpha Premium. And if you want my email address, again, it's up here. So if you have any questions, hit me up. I'll talk to you later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound.